Well, good morning to you. I'm Pete Najarian. This is The Take on Market Rebellion. And I got to tell you something. We finally broke a little bit of a theme that we were watching last week. And that theme I'm going to talk about in just 1 second. But let's look at what was going on last Friday. And as a matter of fact, in last Friday's trade, we opened up in the market. We were up about 250, 300 points to the upside. We had that terrible unemployment data. And yet the markets were shrugging that off. Multiple reasons why that might happen. I think the expectations were for even worse. So that certainly was a factor, I think, that played into it. And a lot of this was expected. So it was, even though it was awful, so much was probably being priced in that people were understanding exactly why those numbers were exactly what they were. And because of that data, market was up early on. Matter of fact, about midday, you're looking at the S&P was up about close to 1.5%. The Dow was up about 1.5%. NASDAQ up a little less than that, but up like 1.25%. Now, the interesting part was the theme that finally broke was that selling off in the final, pick your number, 35 minutes to 2 hours of the final section of the day there. We did not have that on Friday. As a matter of fact, we accelerated that move to the upside, finishing up well over 400 points to the upside. Finished up almost 1.7% on the S&P, 1.9% on the Dow, and the NASDAQ 1.6%. So just to give you a little bit of color of something that changed, we talk about themes all the time, whether that might be in the volume category, the volatility category. By the way, speaking of volatility, how do we not avoid the fact that we got to the lowest level since March 3rd? We had not been below 30 in quite a long period of time, and yet closed down there. And that was something pretty interesting because we've been watching this sort of moving down. And we got some ranges for a while there, and then we finally cracked that range. So will this be part of a trend as well? Are we going to continue to see this? We'll see. Time will tell. But for right now, you're looking at volatility. If you're trading right there, call it 28, 29, somewhere in that category, you're looking at a just under 2% move. Well, my goodness sakes, the S&P was up just under 2%. Dow was up just under 2%. Gives you a little idea. A lot of those folks who want to poo-poo this and talk about the volatility index and it's meaningless, I totally differ from them. I've been watching this for many, many years since I got into the market in 1992. And I can tell you the volatility index that we have had has really given you some great insight into where the markets are, and add a little bit of that, add some volume. We had some great volume on Friday. As a matter of fact, it really picked up. Now, we got a lot closer to the year-to-date volume, but still very low volumes, relatively speaking. And when I say that, I'm talking about for the month of May, we kicked her off pretty nice. We had some slower days, and then we finished off Friday with a pretty nice volume day. So we're still very early into May, so we're not going to jump to any conclusions on that. Gold clinging towards that 1700, oil trading around 24, but that oil moved to the upside. You know, everything seemed to be moving. When you look at the major indices and sectors, I'm taking a look for you right now. So you've got energy on Friday. It was led by Chevron and Exxon, the big dogs, moving to the upside. Industrials, you still had Boeing and Dow were big contributors there. Material space, we've been talking about all the activity that we've been seeing over time in the material space. We've talked about tech resources. We've talked about Freeport-McMoRan. U.S. Steel's been hitting more and more often. So we had a nice solid move across all of those various areas. And then, of course, the consumer. We've been talking about Home Depot for a long time. If you watch the Boots on the Ground that my son and I put out, not every day, but about 2-3 times a week, you get a pretty good sense. We've been going to these stores for a really long time. I've been doing that theory ever since I read Peter Lynch's book back in 1992 about the markets and knowing what you should be involved with and understanding the companies if you're going to be a part of those. So I've been doing my own version of that for a very long period of time. We've continued to do it. Now we're having a little bit of fun and we're putting it up on videos on Twitter and Instagram and all that kind of thing, where we are trying to show people, hey, look, what is it? What is it on the boots on the ground? Are you really there? I hear so many folks all the time, CNBC, all over the place, who have so much commentary who've never walked into a Walmart. They've never seen the inside of a Home Depot. And sometimes by getting that boots on the ground and actually seeing and experiencing, you can differentiate. You can make a lot of decisions. You can see so much more. You can talk to the managers. You can see what's really going on in the online space. How are they doing in terms of visitors and all that type of thing. So we've been talking about that through this coronavirus pandemic that we've been going through, but this is something that we've been doing for a really long period of time. And I can tell you, it's amazing how much insight you can gather. And if you go back to some of our originals, because we've revisited over time many of these, you go back to some of those originals, You could see those parking lots at Home Depot. You could see the parking lots at Lowe's, at Walmart, at Target, and you name it. And we've been talking about this time and time again. And I think that's part of the idea of understanding, seeing with your own eyes, walking around, maybe if it's safe, walking through the aisles, you got the masks and obviously the separation that you need to have, but you actually do see what's going on out there and go to more than one, but get a good sense of what's going on in the marketplace. So that's something we've been doing for a really long period of time. Now, on Friday, I gave you some unusual option activity in Twitter, and that stock spiked to the upside because when they were buying, it was trading in the low 29 area, shot up to the upside, up and through 30. Today, pulling back, but still above where they originally were buying. But the interesting part about Twitter was they had two buys that day. So two different strikes. So that was pretty interesting. And that was something that stood out for us. And they're going out, buying a little bit of time as well. So there is time there. On Semi was another one of these that had two separate buyers on Friday. And then you go back to Disney, and we talked about that one. So many haters on Disney. And yet, from what we're seeing from some of the reporting, it sure looks like there is demand in Shanghai. So we'll see how that all plays out as they're just starting to reopen up. And we're talking about the states as they've been slowly kind of drawing back on some of the restrictions and how much we're starting to open up ourselves here in the United States. Not completely, but certainly just loosening up as we get to that. Now, today, we're looking at a market that's really got some huge pressure on it. Matter of fact, we're down about 250 points as we speak. We've been down anywhere between 180 and about 250 points as we started to approach the opening of the day. And now quite honestly, throughout that opening market, and it's very illiquid, we all know that. That's why you don't want to read too much into it at times. It was green, it was red, it got extremely red, and now here we are. I'd call down 250. I guess in the old days, that would be extreme. That's just a movement of the markets that we have in today's market. But right now, the Dow's down about 1%. NASDAQ is in green territory. It's been in green more often today than not, but we have seen a little bit of push to the downside. It was down about 0.25% earlier. But again, the NASDAQ and the dislocation starting to kick back in. Technology. But today, a lot of it's not necessarily just technology or just in the semiconductor area. We're talking about biotech because one of the areas that has been green all morning has been in that pharmaceutical area. The biotech area have been the one area where you've been able to see some very nice green as we've been looking across. Now, oil got a nice little bump earlier. It was trading around 25 bucks. A little bit of cutbacks going in there and that being a part of the story. But that's not moving over into a lot of these stocks because as I'm looking right now, what are some of the areas? Energy's down about 1.5%. I got materials and finance. Now the financials they just have the hardest time catching any kind of footing. I'm looking at JP Morgan and I hear everybody telling everybody, oh, you've got to own JP Morgan, especially if it gets towards 90. Well, it's underneath 90. We'll see if all those buyers come back that say that's the place to buy. But the financials continue to have a lot of pressure. And I will point out, Brian McCormick here, Market Rebellion, one of the great chart guys you'll ever see. This guy is just amazing how fast he is. Anybody who's been on any of our round tables or any of our various discussions in the post-market, the happy hours, they'll understand. Brian is unbelievable. He's very quick. He's been talking about something that he's been seeing in the financials, specifically in Wells Fargo. So I would encourage you to go over and take a look at what he's been talking about there and showing the graphs and seeing the breakdown that we're seeing there that really does stand out amongst all the financials right now, I think. So that's definitely something that's worth following. But then you look over at healthcare. We talked about healthcare. It still is in the green, but Boeing leading a little bit to the downside in terms of the Dow because we're seeing some of those industrials start to pull on the markets as well. So the heaviest, though, right now on the market's been there all day. Marriott, airlines, hotels like Hyatt as well. So you're seeing a lot of pressure coming from those areas. And we go right back to hospitality and the airlines and all that, cruise ships. There is some pressure there, no doubt about it. And that's certainly something that's being a huge effect on the markets themselves. Now, talk about unusual option activity all the time. We always like to give you at least one. So I'm going to give you one today. But it's pretty interesting. It took me a little while to decide, and this is very early. We're not even 45 minutes into the trading session. I'm going to give you a quick update. 45 minutes into the trading session. We're down 250 on the Dow. We're completely flat on the NASDAQ. Absolutely flat. It's amazing. The S&P 500 down about 0.75% to the downside, and the VIX trading around 30. Now let's remember, you're around at 32, you're talking about a 2% move every single day. Every single day, daily, a 2% move. We're getting a little less than a 2% move, at least right now, as we talked about on Friday. So the volatility index is exactly on point in terms of where it should be right now. Now, back to the unusual. Zoom. This name hits all the time. It's been on an absolute rip-roaring recovery because it had some pressure on it. The Facebook competition, all the various things, but we also know how many folks have been Zooming that never even heard of Zoom before, and some of the activity explosion that we're seeing there. So 52-week high is 181. Today, stock was trading about 161, so about $5 to the upside. We had a buyer of the May 180 calls trading about $1.50, about 2,500 of those. Not huge size, but this did stand out because you're talking about a move towards the 52-week highs of Zoom. So that's a big statement. By the way, right now, the stock made a pretty quick jump. It jumped another $5 right after that buying. So we'll see as this plays out. You got a full day of trading in front of us right now. But basically, the interpretation is maybe there's a little bit more fuel. Doesn't mean there absolutely is, but maybe there's a little more fuel in the tank and Zoom can make a move in the next short period of time to the upside. These are May expiring 180 strike calls. So always remember this. We've been talking about this for a long, long time here when we've been doing these. And I can tell you, the short-term trade was the trade of 2019. It's gotten even shorter in 2020. And for understandable reasons, because it is so difficult to look out in any kind of a time frame right now to try to figure out what's next and how things are going to play out and what's going to be open. What are the effects going to be? So because of that, I think that's part of the reason we are seeing such a shortened, and it was higher volatility, still higher volatility relative to 2019, and particularly in January when we were trading around a 13, 14 VIX. Here we are trading 28, 29, 30. So double that, give or take. So that's the interesting aspect of what we're seeing. So people are playing things very, very short term. 1 week, 2 weeks, 3 weeks, that is the norm. That is what we're seeing. So the fact that what we're seeing in Zoom today is May, that does not surprise me at all because everything has been that short term in terms of the time frame of expectations of moves and people not wanting to buy that time, not wanting to go out as far in time, not doing nearly as much September buying or October buying or maybe even out to January. We're seeing some of that, but certainly the majority of everything we see each and every day on our unusual option scanners is extremely short term. Guys, I'm Pete Najarian. This is Market Rebellion. Educate yourself. With that education, you can understand the derivatives and the growth world of the markets that much better and give yourself a much better opportunity for success. Have a great day.